What's up, guys, and welcome back to another show. And my name's Dave. Look, maybe if you are like me, you're wondering kind of what's going on here with the stock market because people keep saying the recession's coming, the crash is coming, and it hasn't come. Uh, we keep going up. We're in earnings right now, and stuff keeps going up. And that crash, everyone's talking about what happened to it. When we look at UVXY, it's at an all-time low. It keeps breaking all-time lows, actually. We got another all-time low a few minutes ago. Looks like it hit 2109. And, what are we supposed to do? When's this supposed recession and crash and all that stuff coming? And what are we supposed to do until then? Should we just call it a day, like put everything in cash and just wait for that crash to come because it's just about to come? Well, I would propose to you that we just keep playing it like we have been until further notice, which in my mind, until further notice, the market's going to continue to rally slowly. You're going to get down moves, of course, but for now, we're just continue to rally. Now, all that being said, I don't really want to have a big short on in UVXY, even though things could move lower. And there's a couple reasons for that. Let me make the case for not being short in UVXY here for a second. Okay, well, first of all, we are, as I just mentioned, we did hit the all-time low a few minutes ago. We have had a couple all-time lows lately. I was looking at one chart of UVXY. Look at this yearly chart. Now, that's not a yearly chart. If we go out to, and we look till last year, and this isn't the one I want either. Let's go to the 3-year, and then, all right, so this is a 1.5-year chart. So October a year ago, UVXY was 35, not that far from where it is right now. And look at the path it took over the last year. It went all the way from 35 up to 90 and back down, right? So certainly this can move higher from here. Ultimately, UVXY will move lower, and we will get into a situation where it does a reverse split. However, this will move higher at some point in the interim, most likely. If we go to the VIX, unlike the UVXY chart, the VIX chart moves up and down. So that's the VIX chart over the similar period. But if we look at a VIX chart over time, we're just going to see it going up and down, up and down, up and down. And right now, it's been going up for a couple days. The low is like 13 and change. Now, this certainly can move lower down to like 10 or something. It was at 10. We did get to the all-time low of 890 something a couple years ago. So it could move lower from here. We look like we're kind of in a mid-ish range here. So don't get confused and think we're at the very bottom here and this is the time to load up on stuff. But that being said, in recent times, we've seen VIX higher than here a lot. And this is kind of at the lower end of the range recently. If we look at this is a great chart to look at because it's ambiguous in that it looks like it could be mid-range, but it also could be lower range. When you flip through charts, you can make a case for different things just looking at what time period you have on a chart. And my overall point here is that the situation is ambiguous. When you come on something like StockTwits, let me put the chart away just for a second here. When you come on something like StockTwits and you see all these people with this very, they're very forceful and alpha, and they're very convincing that they believe this or that is going to happen. Apple's definitely going up. The VIX is definitely going down. The VIX is definitely going up. And they act like for sure that they know that this is going to happen. When you see that, you might be like, oh, wow, these guys are great traders. They make tons of money. They must know what's going on. There must be some sort of like inside information that they know about that I don't know about because I'm just starting out. The more time you spend with stocks and the market, the actual secret knowledge is that nobody knows what's going to happen. So when you hear somebody that appears to know what's going to happen tomorrow, you got to kind of laugh at that, and that is a naive thing. It's a naive way to feel that you know what's going to happen tomorrow, and because it is impossible to know what's going to happen, and it's more impossible to know what's going to happen tomorrow than to know what's going to happen in the next year, almost, in my opinion, because daily fluctuations in markets are not predictable. Period. And people who say they can predict them, they really can't. When people look at charts and then they say, well, because this happened in the past, I think this is going to happen in the future. Yes, you can look at charts and see what happened in the past, but it doesn't tell you for sure what's going to happen in the future. And the nature of trading is that it can be difficult to predict what's going to happen, and it can be difficult to decide what to do trading. And that is the nature of trading. So when you have a feeling that, like, oh, this is difficult here, I don't know what to do, that is a normal thing to have. And these people that pretend that they know what's going to happen and they always know what to do, they're going to be wrong a lot of the time. Now, I don't want to confuse you with being gun shy, because certainly, just to tell you a little story, I had somebody come in when I used to work as a pit trader. I stood in a pit in Chicago, and I made markets, and I responded to a broker coming in with orders. And so a broker would come with orders and want to buy this or sell that. I would make them a market, and then I would trade with them. I was trading, I think, somewhere between 15 and 25 stocks in the pit at the same time. And we had a trainee come in, highly educated, went to one of the best universities, went through the training program, and when he finally got on a badge and was ready to go, he just couldn't really do anything. He said, well, I could buy that, but something bad could happen, or it could go against me. I could sell that, but it could go against me. You can't make any money trading unless you actually do something. So the first thing to do once you're all set up and your accounts set up and ready to go is to do something. Now, I wouldn't do anything big, but do something small. Buy one thing, sell one thing, and that's the way your journey begins. So, yes, the situation is ambiguous. At all times, it's somewhat ambiguous. However, that doesn't mean that we don't trade at all. But we are aware of the fact that we can be wrong, and we're going to be wrong sometimes. And so we manage our own emotions and our own decision making, knowing that things could go against us. That feeling you get when you watch somebody on a chat room or something saying, this is definitely going to do this, that feeling like, oh, wow, some people, get it and I don't. Now, there are certainly cheaters out there. There are people who are privy to information that's not known by the public at times. Like, for example, maybe a company has a product coming out, and certain individuals know more about the product than the public actually does, and are able to have more information, and they're cheaters. They use that information to make money. There's cheaters out there all the time. You can sometimes identify them. You might see, for example, somebody coming in and buying a bunch of options, betting a stock is going to go down, and then the next week it actually does go down. And those people are cheaters. And if you can identify the cheaters, if you could really tell who they were, then you could follow them, piggyback on their trade. But it's, once again, difficult to do. And in this world where everybody trades from different places and there's all these exchanges and stuff, it's very hard to keep track of any sort of exactly what's going on with the order flow. When things all happen in one spot, back in the 80s and 90s, there were things called single list stocks where every option order had to go through one or two people. And if you were one of those one or two people, you could kind of keep track of what was going on. You know that this customer bought 300 of these options. Now they either have to close the position, let them go out, let them expire the way they are, or roll them. And you could take notes, and you could kind of analyze the character of different orders and really dig into things. It's much harder to do that now. But don't feel like you are an outsider when the situation is ambiguous to you. And when you see somebody saying this is definitely going to happen, you can, in your mind, you can say to yourself, I'm actually more, I actually know more than them, because I know that nobody knows exactly what's going to happen. And I know that it's silly to say this is definitely going to happen. It's almost like one of those scams where, like, you could imagine a guy having two accounts, account A and account B. One account, he says, this is definitely going to go up. And account B, he says, this is definitely going to go down. And whichever one he's right on, he keeps. And the one he was wrong on, he just deletes that post. And he takes credit when it goes one way or the other. And I'm certain some of that happens in the trading world and the world of, trying to sell people classes and stuff like that. Don't think that anybody makes money every day, or that anybody makes like 200% a week. All that stuff is ridiculous. All right, let's just dig in more specifically to the VIX now for a few minutes. One thing that was we had expiration last week, and one thing that was very notable about the last expiration was the difference between the VIX price and the price of the futures was very wide right after expiration. Now let's pull up VIX Central for the term structure to discuss this, and let me get out of the way for a second here. Now, if we look right now at this screen that I've put up, and I'm going to get out of the way here. If we look at the screen that I just put up, this is a screen of the VIX term structure. And of note here is, and let me make this a little bit smaller here. And I put this on my little clipboard thing. All right, so what we're looking at, if you look over to the left here, that bottom dotted line is the spot price. And that's the VIX. If you were to type VIX into your computer, that price would come up. Right now it says 14.29. The futures are up above here, and these two futures from left to right, the one that says 1633 right here, and the one that says 1725, those are the only futures. These are what make up the price of UVXY, TVIX, VXX. It's based on these two, a mixture of these two. So that's the most important part important part of the chart as far as what's directly affecting the price of UVXY or TVIX. And when we're talking about the roll yield, or the difference between spot and the futures, we're talking specifically just about this distance right here. Right? Now this distance on expiration was over 3 points. It was like 319, which is one of the widest ones we've ever seen. Right now, if you do the map, you see it's just over 2 points here, which is a much more reasonable distance. Now, you might say, well, 2 points, 3 points, that's not that big of a difference. It's just 1 point. But it was very wide. And what happens is if the market just kind of does what it's been doing lately, and it's just slowly up to unchanged, these futures are going to slowly fall towards spot. And as they slowly fall towards spot every day, the price of UVXY is going to go down, even if the VIX isn't going down. So, for example, today, when we look at our terminal here, let me see if I can make this a little bit bigger here. When we look at our pricing here, we can see the VIX is unchanged, but the VIX futures are all down. And the reason for, and so what's happening here, once again, is just these futures are falling. I got to get faster on the draw here. These futures are just falling once again towards the price of spot. And as that happens, UVXY goes down, even though the VIX is actually going up over the last couple of days. If we look at the VIX, it shows unchanged right now. But if we look at it over the last couple of days, it's gone slightly up. You can see the low of 1331 here, and then it's slightly moving up. So what's happening right now is VIX moving slightly up, but the future is moving slightly down. So you're going to get people saying, this is manipulation. Why is UVXY down when the VIX is up? This is clearly the market makers are doing something to us. And indeed, if we look here, once again to this chart, you see UVXY down 63 cents, VIX up. And a lot of people are only looking at these two, VIX and UVXY. They're not looking at these futures down below here because these futures are telling the story. Look, you've got the two futures each down, and thus UVXY down. Futures down, UVXY down. Now, you might ask, for example, well, UVXY is 1.5 times leverage. These futures are each down, like, let's say 30 average. UVXY is down 60 cents. So that's 2 times leverage, right? 2 times 30 is 60. So what's up with that? Well, what's up with that is that at the end of the day, the price of UVXY gets marked by some companies and some data feeds at 4 o'clock. Other companies and data feeds, it gets marked with what I would consider more correctly at 4:15. But either way, the futures are going to get marked. The baseline where they start from to be down 35 cents, for example, for this future, gets marked at about 4:15 to 4:20 when they close, or when the options on the futures close. And UVXY, the price ends at 4 o'clock. And thus, if stuff moves between 4 o'clock and 4:15, you get this discrepancy in pricing. And that's why it looks like UVXY is down 2 times leverage instead of 1.5 times here. It's due to that 4 o'clock to 4:15 funkiness in pricing. But over time, if you were to compare these prices 3-4 days in a row, you'd see it actually does all line up and make sense to be 1.5 times leverage. So there's that. A lot of people also will talk about VVIX. Pull VVIX up here if we move down the line of things here. VVIX, now VVIX, of course, is what VVIX represents is the change in options pricing of options on VIX futures. So if you were to pull up VIX in your Thinkorswim here and then go to the options screen, now there's no options on the VIX, but if you go to VIX and pull up the options screen, it's going to show you options on VIX futures here. So if we look here, all of the ones that say, all the ones up to NOV expiration are going to be traded on the NOV future. So these ones here, up until the 13th, I believe. Let's take a look and see when NOV expiration is exactly. To do that, I just go to the ProShares website is the fastest way for me to look at it. I probably should have that memorized, but if I don't, I can go and say NOV 20th is expiration. So all options on the futures here up until this NOV 20th, these would all be hedged with the NOV future. The next one would be hedged with DEES future and Jan future, etc. So change in pricing on these options, and you can see on the right the volatility levels. If there's buyers, VVIX is going to go up. If there's sellers, VVIX is going to go down. Right now, it's down 188. So there have been sellers on these options. If we were just to go to the Analyze tab, we could just pull up a quick time and sales just to give us a rough idea of what's been trading. And we see 10,000 DEES 19.5 calls, traded 11 cents. The market was 10 bid at 15, so that looks like customer sells 10,000 calls. So surprise, surprise, customer sells 10,000 calls. VVIX is down. Now, we haven't seen VVIX below 90 in a while, so this is interesting. But I wouldn't look at VVIX in the terms of like absolute numbers, like 100 is significant for some reason, or 90 is significant. That's not really the way it works. I would look at it more in terms of which way is it moving. And if we look in the last couple weeks, it's been moving lower. And that, of course, all corresponds back to the fact that the market is moving higher. And we're over 3,000 now in the market and hanging out up there. So hopefully this makes a little bit more sense to you. if you were looking at it and saying, oh, this is a ripoff, I'm being scammed by a market maker. No, not actually. That's not actually the case. Actually, what's happening is the market's slowly rallying. The VIX is kind of stable, but the futures, the roll yield, the difference between the VIX and the futures was very wide. And as we're in a calm environment, those futures are slowly going to fall down towards the actual VIX price. One way some people would put it is that the people trading the futures, they don't want to chase them down into like this really cheap range right away. They want to see if things are really that calm to justify the 1428 VIX, and slowly these prices move lower to come head down towards that VIX price. Now, if we stay up here for an extended period of time, you'll see the VIX move lower and these futures move lower with it. But just because the VIX races lower doesn't mean the futures immediately follow it. And the very interesting thing with the VIX term structure is there's no arbitrage between the VIX and the VIX futures. With something like the S&P, you would never have this disparity between the cash and the futures, because if you did, there would be an arbitrage situation. What do I mean by that? Well, with the SPX, if you had a situation like this where the futures were so much higher, you could go in, buy a basket of S&P stocks, sell the futures against it, and you would be able to make a return. The difference you would be able to capture and make money on. And so people would immediately rush in. They would sell the futures and buy baskets of the S&P, and the futures would move lower because nobody would be, it would be only sellers in the futures, so they would take it down. But with the VIX, there's no arbitrage situation between the VIX cash and the futures, and so it can stay in this shape for an extended period of time. Now, when we look at these at the VIX term structure, people talk about contango a lot, and the difference between the two futures that are so important to our calculation, the M1 and M2 futures. Right now, the NOV and DEES futures. Right now, we're showing 5.6% contango, and what that means is that the DEES futures are worth more than the NOV futures, and the contango is that percent difference. And this is going to it's going to tend to make things in favor of a sort of a decay situation, because as time goes by, the model takes into account more the DEES future than the NOV. UVXY is based on an index. We can pull up the index here. But the index is based on a mix of these two futures, and as it becomes based more heavily on the one that's farther out, that allows more space for the futures to fall. So here is the index which UVXY is based on, and I need to switch this screen so you can see it. SPVXSPID, and as time goes by, this index favors more the second month future, and just if we were to play a little quiz here, all right, which future, which one provides more room, which place has more room to fall, here or here? Well, certainly the second one has more room to fall for the future, and thus, as we move forward in time, and these are composed more of the second month future, we have more room for these things to fall, and that creates more opportunity for UVXY to fall. Now, people who are like buy the dip people or contrarians might say to themselves, well, UVXY has gone down so much. All it needs is like a partial retracement, and I'm going to make a fortune. This thing shows here 3 years, UVXY was basically gone from $2,000 to $21. So if it just even retraces a little bit to like 500, I'm going to make a fortune. The thing is that the nature of these futures, of it being based on two futures that roll off, once this no future is gone, it's gone forever. and you can't get it back. And so you would need this to reverse itself and actually face the other direction where the futures were sloping down for a very, very long extended period of time to get back up to those numbers of like 500. And the thing is that to have this shape in a reverse of the way it is now, the only way that would happen is if the market was falling. I'm just getting my pen out here for one more second. The only way you could have it sloping downward like that between the two futures is if the market was falling. And to have it for an extended period of time, what would happen is the market would have to go to zero, and you still wouldn't have enough time to get us back to a situation where UVXY was like 500 or something, because in backwardation, even for like a couple months, would have the market would have to cut in half, because remember, to keep us in backwardation, there needs to be continued acceleration to the downside in the market. So it's basically mathematically impossible for this. I mean, while mathematically possible, the market would get to zero before you got anywhere near UVXY getting back to 500 or 2,000 or any of those numbers. So although it kind of it sounds like a good idea because you're thinking about stocks instead of thinking about this blended this ETF that's based on an average of two futures. Don't get that confused with a stock. This is not a stock. If we pull up ACB, yes, ACB could come back to 12 eventually because there's a supply and demand here. But UVXY is not a stock and is not like it. So you need to kind of adjust your thinking to realize that. All right. I know I've thrown a lot at you today, but I will repeat it again because I just go back and back over these things over and over again, and hopefully it helps you a little bit. What I can't tell you is what UVXY is going to do next and how you should position yourself. If we do go over our sample position here right now, my idea is that to just treat UVXY as a volatile instead of like leaning really short right now, my idea is just to treat this as a high volatility issue and maybe sell just a little bit of options to collect a little bit of income. And so that's kind of what I'm doing right now. I am just short a little bit of at the money options. So I sold 3 UVXY of the 21.5 calls, and I bought 100 shares against them. So basically, I'm short a small straddle in UVXY right now, but I'm kind of pretty much on the sidelines here because at this, when we keep hitting the all-time lows, it's not a time when I want to lay heavily into a short. Also, we are below average on the VIX right now, so none of these things make me want to initiate a short position here. I did have a short position on for a while, but I'm small here. What I want to be able to do is have the ability to put on a position when the time comes that we do spike, because the VIX will go up again from here. It always does. Go back to the chart here. You can see we're kind of on the low end here. It is going to pop up again at some point soon. It always does. And when that happens, I will be ready to initiate a short. But for now, I have almost no position because I don't have an opportunity here. We're at the low end. I'm not a fan of getting long volatility, so I'm just hanging out here, biding my time. All right, so there's some information for you. Good news for people who like to watch the channel is I'm coming out of the high season for where I work, and there's going to be more time to make videos, which I'm excited about. I am going to be bringing in the person who helps me with the camera, and we're going to be going out of the studio and having some real fun. I can't wait for that time to happen because I love making videos. So you're going to get more and more and more content very soon now because we're coming out of the high season. High season ends in about a month, and then it's going to be time to have some real fun with the YouTube channel and give you some great information that hopefully you can trade on. The other thing that I did buy, which you might want to check out, SCIF, it's India Small Cap Fund. I think it's made a huge run down, and I think there's some room for this to retrace a little bit to the upside. So check that one out if you want to. SCIF once again. Besides that, long term, I am long USMV. I've talked about that one a lot, the low volatility fund. And beyond that, I'm mostly cash right now. So hanging out on the sidelines, and we'll see what happens next. Thanks for watching. See you soon. Bye.